24 hours ago, I declared the end of the DeFi bear market and why I believe a new bull market is emerging before our very eyes. In this video, I'll explain why I think that is through first principles thinking. This is going to be the agenda for the video. Timestamps will be added in case you want to skip through sections. It's going to be a longer video, but that's what you get when you're subscribed to me. So in order for you to understand or to set the groundworks first, let's take a trip down memory lane and understand what caused the DeFi bull market in 2020 in the first place and what ended it in 2022. So before I get into it, none of this financial advice. I have no idea what I'm doing. I really don't. I'm just clicking numbers and hoping it goes well for me. So the 2020 DeFi bull market was catalyzed by this, basically like the Fed setting rates to zero, by them reacting to the COVID pandemic. And when people just are earning 0% interest rates on their dollars, people are going to seek higher sources of yield, and capital eventually found their way on chain. And you can see this through the DeFi Llama TVL chart in 2020. DeFi TVL was basically zero, and then slowly and surely over time, more and more money found their way on chain, and we kind of had this parabolic melt up, with crypto prices going up in general. And stablecoin liquidity is very, very important for crypto prices, because for every dollar that enters the ecosystem, some percentage of it trickles down into buying our tokens. This is called the multiplier effect in economics, where, for example, if you buy like a 10-pack of beer for that costs like $30, then the part of that goes to the manufacturer so they can pay their vendors. Some of that goes into their employees, and with the dollars that they earn, they buy stuff, and then you kind of have like this multiplier effect. And this is very, very apparent in crypto, and it's kind of like this idea of reflexive thinking, where when price goes up, the yields go up, and then the perception of the fundamentals get better. And as people think that the fundamentals are improving, people buy up the tokens, and then if people buy tokens, then the yield improves, and then you kind of have like this reflexive loop. And it's amazing in a bull market, but it also happens in a bear market. Dollar flows in, price goes up, yields go up. Everyone's rich, more speculation, but of course the reverse can happen. And when the Fed went on this hiking rampage, right? Like it's like the fastest rate hike campaign in the history of the Federal Reserve. What happened to DeFi TVL? You guessed it, it went down, right? March 16th was when they first raised interest rates, and we have this mark here, and then it's only been down only since. And of course, we all know what happened with all the blowups, right? There's centralized lenders and various DeFi projects, and we all know it way too well. You don't need me to explain it there. And if you kind of think about it, like what can actually create a new DeFi bull market? People want like 10,000% APY that goes up only to make everybody rich. But before that happens, you kind of have to have more money flow back on chain, right? You can't just have Ponzi's go up before some fundamental things are improving, on the base layer. And I think what actually needs to happen, and this is like the prerequisites of a DeFi bull market, until on-chain yields that are perceived very safe can offer higher yields than the risk-free rate, we cannot have a sustained bull market. But finally, I see a world where this is possible, because previously, yeah, sure, you can LP on Curve, Convex, stakes like stable coins on like random new applications, and you can earn 10, 20, 30%, whatever. But that's not really perceived safe, right? You're always taking some amount of risk, and most of the yield is paid out in the native token. So if the price goes down, yields go down, TVL leaves, and then that doesn't really create that much new economic value. And I think that there's this new trend emerging under the real world asset sector, and I actually think it's going to save DeFi. So the real world asset sector, its TVL has been up only, and so far, this chart from rwa.xyz says, okay, there's $600 million worth of TVL in tokenized treasuries, but this doesn't take into account Maker, which it owns like over $2 billion in treasuries. And this trend is growing, and I expect this trend to just be up only in the foreseeable future. And a bunch of DeFi protocols are tokenizing US Tbills on chain. So right now, if you log into Fidelity, right, if you're like a US citizen, you can just take your dollars, put it in Tbills, short-term Tbills, and then you earn like 5%, right? It's amazing. But right now, there's like no way to like access that on chain in a permissionless manner, and like DeFi yields are capped at like 2-3%, right? Like how can you expect more money to flow when like you can't beat the risk-free rate? But these DeFi protocols, they're buying short-term treasuries off chain through a KYC to counterparty, and then transferring the yield to on-chain participants. And Maker is a prime example of this. If you go to makerburn.com, you can kind of see, okay, like through this vault, like this Monetalis, I don't know how to say this, there's $1.1 billion worth of T-bills that they purchased, and then they take a 4% or 4% of $1.1 billion is going directly to Maker, the protocol, and then also like token holders, and then Coinbase custody. I mean, they're fleecing Maker because Coinbase is like clipping 5%, but they're only paying Maker 2.6%. And right now, they're the only project at scale executing on T-bill purchases and directing interest payments to create value for its own token. And I actually think that is like one of the prerequisites of a bull market as well. Right now, there's a DAI savings rate where, with the T-bills that they purchased, they make money, right? And with the interest payments, they're giving it back to people that stake DAI, the over-collateralized stablecoin. And right now, it's only 3.49%, just because there's like no competition, but I expect this rate to increase in the near future. And of course, right, it's an amazing business. Maker issues stablecoins, and with the dollars backing those stablecoins, they're buying T-bills, they're keeping most of the profits, sending some to the treasury, sending some to like the DAI stakers. But like the profitability of these companies are insane. And right now, the annualized profit is like roughly $90 million. And if you think about it, right, I mean, people often think about how, if the Fed raises rates, it's actually bearish for like crypto and like higher risk assets, like long tail assets, which is true on average. However, if you kind of just think about Maker in a vacuum and other tokenized T-bill projects, their revenues actually go up when the Fed raises short-term rates, right? Because if they buy short-term treasuries, that increases the interest payments once those T-bills mature. And right now, Maker is buying back its own token from the interest payments, $5,000 every 30 minutes. It's not going to be like this forever, right? It's going to go down over time. But in the short term, right, there's so much excess profits that the protocol is generating. And right now, it's going, it's not going to the token holders, but I guess it's indirectly going to them through these buybacks. And I'm not going to spend too much time on Maker because I spent like 20 minutes on this last week. But, feel free to check this out feel free to check this video out if you're interested. But let's go back on the original topic of how these real world assets and tokenized treasuries can catalyze a bull market. Because these businesses, like, they're kind of fleecing retail in a sense, because when you deposit dollars to the crypto ecosystem, and you hold Tether, for example, like, you're effectively being diluted, right? Like, you're not really earning the risk-free rate if you're just holding Tether. And Tether literally takes your money, puts it in T-bills, and then just pockets the profit. And like, funnily enough, like, they're like buying Bitcoin and gold with it. But in Q1 alone, they made $1.5 billion in profit, right? I mean, what an amazing business. And so tokenizing T-bills on chain, like issuing stablecoins, buying T-bills in the back end, like, how can people not want like their share of the pie in that, right? I mean, it's free money basically, right? As long as you go through like the proper regulation and like all that. I mean, not everything is like regulated on DeFi, of course, but like some are more regulated than others. So, tokenizing T-bills on chain, tokenizing it and creating innovations and more efficiencies on top of it through DeFi is, I think, a viable path for DeFi yields to eventually exceed TradFi yields, because TradFi yields are currently 5%. If DeFi can offer, let's say, 10% in a risk-free rate, I can't see why more capital doesn't find their way back on chain. I can't see why capital would leave on chain. And that's the DeFi bull case I'm making. And I know what you're thinking. Well, the DAI savings rate is 3.49%, but the risk-free rate is 5%. That's not high enough. And I get it, right? I mean, look at me, right? Like, I can do math, okay? Like, look at me. But, that's not the point, okay? I'm talking about DeFi, right? Like, DeFi, I mean, the DAI savings rate is DeFi, but the point of DeFi is this idea of money Legos and building things on top. And, right now, the delta between the DSR, the DAI savings rate, and the risk-free rate is like 1.5%. Not great, but through financial innovation, you can actually improve on this. For example, when you stake DAI in the DAI savings rate module, you can get a liquid wrapper in return called SDAI, right? SDAI is this token that's accruing the DAI savings rate, and you can use it for other strategies. It's not that liquid right now. The adoption rate is very low, but like large money markets like Aave, right? They're working to implement like SDAI into their protocol. It's gonna take weeks, if not months, but you can kind of see, okay, like, this is where the puck is going. And right now, Aave recently introduced its new stablecoin called Go. And because Aave is their own, or Aave is issuing their own stablecoin, they can charge whatever interest rate that they want, that the market's willing to pay for. And right now, the fixed rate to borrow Go, the over-collateralized stablecoin, is 1.5%. So technically, even if the DAI savings rate is flat at 3.5%, you can create a strategy where use stake DAI as collateral, borrow Go at 1.5%, buy SDAI, recollateralize it, borrow Go, and then if you kind of loop this 5 times, you can actually get to a 10% APY. I know it's not perfect because there's like loan to value ratio, there's like all that. There's like additional fees and whatnot, but I'm kind of simplifying here, right? Let's not get too caught up into like the details here. But yes, it introduces some new risk because it introduces leverage, but tokenized T-bills, like it's not going to fluctuate in value that much. Like realistically, I'm sure you can like loop it 20 times and like not have, I mean, at some point, right? Like you have to manage risk, and this is gonna be a slow process, but this is the path for DeFi to actually compete with on-chain. It's a path for on-chain yields to compete with the risk-free rate. And if you think about governance tokens and like why DeFi tokens have really underperformed, right? It's like this meme of valueless governance tokens. Well, there can be mutually beneficial partnerships. For example, like if Maker were to, or if Maker and Aave were to, like, let's say, talk things out, and then like, okay, like how can we like do this to create value for people using DeFi? Then Maker can technically maybe do a token swap or like just buy Aave, right, and stake it to earn, sorry, not earn, but get like a discount in the Go borrow rate. So like, you can technically like lower the Go borrow rate from 1.5 to 1.06% if they stake enough. If they stake enough Aave. So yeah, I mean, governance tokens can actually have value. And right, like I said before, in the past, most of like stablecoin yields or just yields in general is denominated in like the native token. And if the native token goes down in price, then the yields go down and there's like no new money being created, right? We're just printing tokens and like hoping that it goes up. However, with this case, right, this can actually be a positive sum game. And we really need those in crypto because right now I still think we're relatively in PvP markets, and any positive sum game that we can like identify, I think it's worth our attention. And if you think about like where their yield is coming from, it's actually coming directly from the US government interest payments, right? It's not being subsidized by token holders. It's not being subsidized by like the treasuries, right? Like the DAO treasuries. Like literally there are external cash flows coming directly from off-chain sources to on-chain sources. And because this is true, right, it creates economic value because Maker is going to be willing to borrow Go, right? They're willing to pay 1.5, like whatever the interest rate is. And like Aave makes money, right? DAI makes money because they clip the 5% rate. They pay 3.5%, right? Like they clip that, but also it creates value for like anyone holding stablecoins on chain. And if you're like a DAO holding like $10 million worth of Tether, right, in your treasury, like why wouldn't they do something like this? Because if you think about like dilution, right? Like if you just hold Tether on chain, you're being diluted by the US government, right? Because they're paying like 5% to everyone else. So like that's one way you can kind of think about it. If you don't know the source of the yield, the yield, well, we know the source of the yield. It's the government, right? The government is subsidizing our bags. Like, I mean, that's kind of a meme, right? But that's kind of like a simplified way to think about it. Of course, looping strategy is not without risk, but like I said, tokenized Tbills, it's not going to go down in like value like 30% overnight. Maybe like on average, it fluctuates like 1-2%. I mean, not really, right? So it's not that difficult to scale this. It's going to take months probably. It's not going to be like immediate, right? Like you're not going to wake up and like see like DAI market cap go to like 100 billion. There's like no way. It takes time for these systems to be built. It takes time for liquidity to flow. But if you take a longer term approach, if you take an optimistic approach, I don't see why this can't happen in the short to medium term, right? Especially in the long term. And yeah, if DeFi can offer 10% risk-free yields, right? Pretty low risk, right? Pretty low risk. Would stablecoin outflows slow down? Would capital come back? I think so. And thinking back to the multiplier effect, this is how we can create a more sustained bull market. And of course, Maker is like this meme, right? Everyone's favorite account, DJ Spartan. He often just like calls Maker like a down only token. He like whenever it goes down, he like just I don't know like. Yeah, like he like pleases himself, right? But like how iconic and how poetic would it be if the real world asset implementation by Maker actually creates a bottom in Maker ETH and then helps revitalize DeFi? Because think about the psychology of the crypto market participant. They're conditioned to think that Maker only goes down. They're conditioned to think that DeFi tokens only go down. But what if Maker starts to outperform? Well, that kind of changes the entire psyche of the market. Well then, if Maker is going up, then maybe Uniswap can go up. If Uniswap is going up, maybe Aave can go up. And I think that's how you slowly, because like a bear market is, it's a mentality, right? I mean, people think it's a bear market, so it's gonna happen. But if people can slowly, capitulate and say, oh, like, okay, like this is actually happening. Oh, like this makes sense. Then that's how you actually create value, and that's how like a DeFi bull market based on fundamental like cash flows can actually emerge. Of course, there's regulation risk, but I addressed that in the Maker video that I posted a week ago. So yeah, I'll talk about that. I've talked about that. And more importantly, as a content creator, this really excites me because it's really hard to create content in crypto, because if there's like no new money coming into the markets, then on average, right, it's like PvP markets, like player versus player, where we're like just trying to take money from each other. And ideally, as a content creator, I can promote like player versus environment games where everyone on average can benefit. I've shared this number before, right? Like every time I upload a video, I lose subscribers, like no one's watching it. I don't run ads on like my videos, so I don't really know like how other content creators feel here, but I can't imagine it would be that good. And I run a DeFi focused channel, so maybe, yeah, if you're cynical, maybe you can say, oh, like your videos are bad, no one cares about DeFi, but this is true for other channels. So Benjamin Cohen, he has this dashboard, right, of, I guess, other YouTube metrics, and these people like cover Bitcoin, ETH, XRP, like whatever is hot, right? And like even their videos are like not even like doing that well, right? So it's not just DeFi, it's just like crypto in general. And over time, like if crypto prices aren't going up, then people don't care, and then we enter this apathy phase, and then like money leaves the system, and it just becomes like a really place to just be active in general. And it's also kind of defeating at times, where it's like, oh, like no matter like what I do, it's like nothing works. No retail interest, no capital flows. But if capital can flow from the US government directly on chain, and this can be distributed to token holders, can't this create a positive sum game where we can all win? Of course, like not everyone can win, right? Because, for example, like right now, like maybe like half people win in crypto because they trade, and like the other half loses. But maybe through these government interest subsidies, maybe 80% of people can win, and 20% of people will like lose because they use leverage or something, right? Or like they get rugged or like whatever, right? Like I said, it's not gonna be overnight. It's like you're not gonna wake up tomorrow or even next week and then just like have coins up like 3x. It's more of taking like a macro approach to what can actually bring bring capital on chain, and I think this makes sense. Like, not gonna lie. And obviously right now people love to speculate on the Bitcoin ETF, and the CEO of BlackRock, Larry Fink, he's gone on like this. He's gone on like CNBC and like Fox and like all these TV shows, and he's just like, oh yeah, like democratizing Bitcoin investing through ETFs. We're super bullish, right? And we love to take fees. Like if you don't read like the headlines and you actually like listen to what he's saying, he also believes that the tokenization of securities are going to be the next generation of markets. He's super bullish, the tokenization of securities. And BlackRock literally invested in Circle, which is a stablecoin issuer, right? They're doing the same thing that Tether is doing, but at like a smaller scale. They raised $400 million from BlackRock. They also raised money from Fidelity. If TradFi is going to buy crypto or invest in crypto, the first place they're going to look is probably going to be in like the real world asset sector. So yeah, TradFi is bullish real world assets. Tether is a real world asset protocol, right? I mean, they're tokenizing dollars on chain and they're buying Tbills and they're pocketing a profit. Same for Circle. And now I think we're going to see more and more like DeFi protocols try to capture more of the market share. Right now, it's starting with Maker, right? And the Maker DAO token. And then there's like other protocols. There's like this catch-22 situation where if like a T-bill protocol, right, is like heavily regulated, right, then they're probably not gonna have a token. But if a T-bill protocol has a token, then it's less regulated. So there's like always a regulation risk. So that's something to be aware of. But I think like until like tokenized T-bills hit like crazy mass scale, like I don't really think the government's gonna bat an eye. Maybe that's like a hot topic or controversial, but that's personally my view, so you can feel free to disagree. But for me, I'm bullish real world assets, and you kind of see this trend emerging. Like a couple of days ago, Binance Research put out this research paper or whatever, talking about real world assets. Avalanche, like they're like, okay, like they're trying to be like a real world asset chain now. And if you think about it, like I feel like layer one should also like really push to be like the de facto like real world asset chain, because if, for example, like if Avalanche, right, becomes like some real world asset chain and like onboards like TradFi and whatnot, then that's like liquidity begets more liquidity. And I personally don't see like why like more L1s or L2s like don't do this. I mean, it's like pretty low risk, right? I mean, tokenizing treasuries, like tokenizing like, I don't know, like real estate, whatever, like whatever, right? I mean, that's like an obvious growth factor. And I think it's inevitable. Okay, so I've laid out my thesis on this medium to longer term bull case for DeFi and the end of the DeFi bear market. So I'll try to wrap it up in like the best way possible. And yeah, so I think real world assets are going to be an up only in TVL sector in the coming months, years, and decades, right? Like if you think DeFi is going to hit trillions in TVL, like it's probably going to, like most of that is probably going to come in the form of treasuries, like real estate or like whatever, right? Tokenized watches or whatever, right? Like, these types of assets. And yeah, that might not seem boring, right? It's like, oh, like Tbills, like that's boring. Like, like that's not going to pump my bags. But indirectly, right? We talked about the multiplier effect. If billions and trillions of dollars flows on chain, then even if 1% of that like goes and like buys like tokens, like it's going to like create significant amounts of wealth on chain. And that really is going to create a reflexive cycle where, everyone can benefit. And like even like thinking about like creating value, right? Like how does the blockchain create value? Yeah, like if you're like an American, and like most of my viewers are American, it's like, oh, like I don't care because I can go to Fidelity and earn like 5%. But if you're not American, right? If you're not like a US citizen, there are like hoops that you have to go through to actually buy like T-bills. And I think the value of blockchain is going to be allowing permissionless access of treasury rates or like the risk-free rate on chain. And if people can even like innovate on that and like exceed like the risk-free rate, I think that's like a fundamental use case for crypto. And I think more and more people will like buy into it, right? I even know like a story of like people that live in Turkey, like they don't like their currency, like the Turkish lira is like down only. So whenever people get paychecks, they convert to Tether, right? And think about, okay, like what if these people can stake their Tether and earn like 4% or something, right? That's value, right? That's value. And yeah, like the multiplier effect, and as more money comes in, people buy tokens. Yeah, we already talked about this. It's super simple, but I really think that this is how the DeFi bear market is going to end and how a new bull market can blossom. It's going to take time, but the point of the video is to see the light at the end of the tunnel. The grass is always greener on the other side, and just be optimistic. And like I'm like a permabull when it comes to DeFi, so I will always give hopium, right? I'll always give hopium. And I guess like a final thought. It's kind of funny that the DeFi bear market, the DeFi bull market ended when like these CeFi companies like Celsius and BlockFi tried to bring on-chain yields to off-chain investors. And as things got competitive and as money flooded the system, these yield strategies became riskier and riskier, and at some point they all blew up. But now, right, like we're all trying to bring off-chain yields on-chain and like maybe create like leveraged products on top of that. Time is truly a flat circle. Hopefully nothing blows up this time. And if you're cynical, right, it's like, oh, like this is so bad. But like optimistically, right, like creating innovation on top of tokenized T-bills, like that's good. I mean, I think that's good, right? Like if you think that's bad, then like maybe you should unsubscribe to this video or to this channel. Yeah, so it's not gonna be like you're not gonna wake up tomorrow, you're not gonna wake up next week, you're not gonna wake up next month, and see your net worth like go up like 10x. But I'm just trying to lay out the groundwork. Like how, I already mentioned this. This is a very long slide deck, so I kind of repeat the same thing over. But that's how it is, I suppose. We did drop a long form research report on MakerDAO a couple weeks ago. So if you want to watch the video, you can do so, right, that I posted last week. If you want to read this, I'll also post a link in the description. Humble Farm Army, right? Like our research company, super bullish, real world assets. And we're constantly looking for other projects that can, I guess, like take that can compete with Circle, that can compete with Tether, and increase the pie for other real world assets. And also, this is something I kind of struggle with, right? People want me to like talk about like what I'm buying, what I'm selling, like what I'm doing, and I'll try to do it like as best I can, and I'll try to disclose whenever I do talk about things. For example, like I mean, you all know that I own Maker, right? Like I own the token. But it also is like if I'm not like making videos like every single day, it's really hard to like, you know, like talk about things. Crypto moves too fast. So in the future, I'm going to be like less reluctant, or I'll be more reluctant to like share what I'm buying. But like if I do say something is bullish, or if I'm like talking about something in like a bullish manner, I will disclose that I'm holding. So hopefully you understand where I'm coming from. You know, like there you go. Okay, so that's the end of the video. I'll provide a bunch of links in the resources below, including this newsletter. If you like the content, please like and subscribe. Leave a comment in the comment section below. And if you want to level up, I guess, your DeFi knowledge and get more videos out of me, feel free to check out the premium Discord. I post 3 videos a week, daily updates. We have hundreds of humble DeFi farmers. The link will also be in the description below. Thank you guys for watching. Let me know what you guys think, and see you next week. Bye-bye.